Here we go. So we went through those first couple sets of journal entries, which were triggered by specific transactions, right? Some sort of payment had to be made, and that's what triggered the journal entry. The last grouping of adjustments are end of period adjustments. And we talked a little bit on Tuesday about how, these aren't the only end of period adjustments that happen in accounting, right? We've got depreciation adjustments that need to happen. We've got adjustments for prepaid expenses that need to happen. This is just another set of adjustments that have to happen, and they relate to payroll. So the payroll cycle does not always, in fact, oftentimes, does not match with the accounting cycle. Good example of that, let me see if I can get a calendar up here, because we can use, let's see. April. I don't know if I can just copy this. Okay. This is a pretty calendar from Amazon. Let's see if I can make it any bigger though, because that's pretty small. Okay. There we go. Let's see. So let's pretend I know this might be a little bit blurry. Actually, blurry for me up close. It might be clearer for you. We pretend for a minute that we have we're on a biweekly payroll period, and we're paying 1 week behind when the payroll period ends, which is pretty normal. Usually, like maybe the payroll period ends on the 21st, but employees don't get paid until the 28th for that period, because it gives the payroll department time to actually process that payroll. Now, sometimes if it's a small organization, they may just pay on that last day. But we're gonna pretend that our pay period ends on the 21st. Payroll is on the 28th, which means our next pay period starts on the 22nd. And if it's 2 weeks, it's going to go through, what is that, the 5th of May, Cinco de Mayo. So 1, 2, 3, 4, 5. It's going to go through that 5th of May. Does that make sense? Everybody following me so far? But what happens right in the middle here is we have an accounting period that ends. And at the end of the accounting period, we have to account for all of those wages that have been earned from the 22nd through the 30th, but haven't been paid yet. Right? So we have to make sure that we record those. That is a liability for the company, right? Those wages are going to have to get paid. They've been earned by the employees. They just haven't been paid yet. So the end of period adjustments that occur, the payroll end of period adjustments that occur because of this. We've got that a timing difference. So obviously there has to be some sort of journal entry made on the 30th. What's that journal entry going to look like? Well, it involves a liability because it's something that we owe that we haven't paid yet. So let's take a look at what that looks like. You have to first off calculate what that liability is, right? So for example, we'll go back to this calendar here for a second. Let's just say, let's just say that that it's just a Monday through Friday work schedule, and our employees all together earn $1,000 a day, right? So maybe we've got 4 employees who are each earning $250 a day. So each day we are accruing $1,000 of liability here. We need to make sure that the expense is going to match the correct period for accounting purposes. So we got $5,000 of wages that we've accrued that we haven't paid yet. We're still going to debit wages expense. So does that make sense? Everybody follow me on the $1,000 a day? Okay, so we got $5,000. In order to make sure that this expense is credited to or debited to the correct period, we're going to debit this on April 30th. And then we're going to, instead of crediting the cash account, because we're not paying it out yet, right? We're going to credit a payable, so wages payable. And that's what's going to happen at the end of the period. The hardest part of this is figuring out how much this should be. Right? If you got a accounting system that keeps track on a daily basis of how much has been accrued for each day or up to the end of that period, then that's not such a difficult thing to do. But if you're doing it by hand, it can be kind of challenging. Now, as I mentioned here, whoops, sorry, you don't see that. I see that. So since there's not an actual payment at this time, we're not accruing any of those taxes. Okay, so I remember the withholding would occur from this $2,400. Now, the employer may accrue their portion of the payroll taxes, though. That oftentimes happens. So again, we would have, remember that payroll or that second journal entry that we did when an employee gets paid. We've got payroll tax expense. Okay, and then we've got as well some liability. So that journal entry may get made at this point, or it may not. But the withholding entry, we're not going to worry about that at this point. Okay, when the employees are actually paid, that's when we're going to do that. Now, not just wages. It may occur not just with wages. It may also occur with different types of benefits as well. So if employees have vacation time accrued or sick time accrued, sick time is usually vacation time is going to get paid out even if an employee leaves. Oftentimes sick pay is not paid out. It's just forfeited if the employee leaves. So sick pay may not be accrued, but vacation pay, PTO, we're all familiar with PTO, paid time off. If you're not familiar with it, so oftentimes employers these days will combine sick pay and vacation time and just allow the employees to take their time off however they see fit, and then they accrue that every pay period. So PTO would be accounted with that as well. Also, any post-retirement benefits, healthcare, pensions would also require an adjusting entry at the end of the period. We're not going to get into what those would look like, but that's more intermediate accounting. Second part of intermediate accounting, which is a class that you would take at like Iowa State or Iowa. Yeah.
So I want to know something.
Mm-hmm.
Which expense and salary expense is the same here?
Yes. Yeah. So this could wages or salaries. Sometimes it's wages and salaries, right? So you could use either one. They're synonymous with each other. You may see salaries expense, you may see wages expense. Wages would encompass all wages, right? Whether it's hourly or salaried. Salaries expense is probably mostly just for those individuals who are receiving a salary payment, so a set amount. Okay. but you could use either one. Like I said, those account names are just going to vary from organization to organization, what they want to call them. So like we may have wages expense, sales, right? Department, wages expense, purchasing, wages expense, so that we can get more specific information about what the departments are spending. So that's what happens then at the end of the period, are these types of adjusting. Sorry, entries. Now, I know that there is in your book, I'll pull this up. Kenya as well. There is a rather extensive problem in your book that we can take a look at. That's okay.
Because in accounting, all the time, all the people use salary expense. I mean, payroll accounting, all the time you use wage expense.
Yeah.
For myself, it's maybe choice.
Mm-hmm. It is a choice. Yeah. Exactly. So hold on just a second here. I'm going to find this. And in fact, in your book, so this is from the book here, they've got a summary of different types of accounts that are used. They've got here wages and salaries. Either wages and salaries expense, wages expense, salaries expense. You could have hourly wages expense, salary expense, however the organization wants to, whatever they want to call it. Okay, let me see if I can make this any bigger too. A little bit better. Payroll taxes, again, that's that payroll taxes expense. Now your book doesn't add the word expense onto it. I wish they would, in order to delineate that it is an expense account. But if you see that payroll taxes, that is an expense account. That would refer to the payroll taxes that the employer is responsible for. Okay. Workers' compensation insurance expense. So that's that workers' compensation that we talked about for injuries or illness that occurs on the job. If it doesn't occur on the job, it is not going to be covered by workers' comp insurance. Vacation benefits, which we just talked about. FICA taxes payable. Remember, that's going to be a liability. We're going to divide up between the Social Security and Medicare taxes. FUTA taxes payable and SUTA taxes payable. These are all liability accounts as well. Employees, federal income tax payable. And again, like I said, that you want to make sure it's employees, because you don't want to get it confused with any federal income taxes that the company may need to pay. Same with the state income taxes. You want to make sure that you would specifically say employees. Health insurance premiums collected, those would be the amounts that have been withheld from employee paychecks that are then going to be remitted when the employer remits the full payment. Union dues, so that's another type of, well, sometimes it's voluntary, sometimes it's involuntary, but another type of withholding. Wages payable could be salaries payable, could be any different, whatever you want to call it. And then those vacation benefits payable. Just remembering that if it says payable, it's a liability. It's not an expense. Okay. All right. Maybe we take a little bit a look at, this is in your book, this illustrative case, and what it does, gives you all the information about, I think it's a couple of payrolls, and what the journal entries would be then corresponding to those payrolls. So, Brookins Company, this is the third quarter of their fiscal year. Fiscal year of the company ends on June 30th. All right, so if this is the third quarter of its fiscal year of the company ends June 30th, that means we're January, February, March, somewhere in there, which means we're in the first quarter for payroll purposes, but for their fiscal year, they're in the third quarter. So for accounting and payroll purposes, we've got kind of a difference here in what year we're using. For payroll, it's always going to use a calendar year. So those W-2s, it makes it a little bit more complex when companies have year ends that aren't December 31st. It can be a little bit challenging when you're trying to when you're looking at payroll, which is that calendar year versus the different fiscal year. So they pay their employees semi-monthly, twice a month, 15th and the last day of the month. When the 15th or last day of the month falls on a Saturday or Sunday, employees are paid on the preceding Friday. So, and that's normal. If your end of the month is Saturday, you're probably going to get paid a day earlier on the Friday. January 1st, these are the balances in the account. So this is what they currently have. So they've got cash of $85,000. That means they've got $85,000 in the bank, right? FICA taxes payable, OASDI. So these would be the amounts, those beginning balances in those T accounts that we've discussed. Food taxes. So these are all the payables. This is how much they've accrued from the previous year that they just haven't paid yet. Okay, so these amounts have been, they already owe it. Federal income taxes payable, state income taxes payable, union dues payable, wages and salaries. Now they don't have payable on here, but these would be payables. You're not going to have, these are all going to be permanent accounts. If you think back to your accounting class, these amounts that would carry forward to the next period would be, they would be permanent accounts. Although I take that back, because they're on a fiscal year, this would be expense and this would be expense as well. So for their fiscal year, that's what's going to go on that's what's going to be included on their income statement, right? Now, for income tax purposes, we're starting back at zero, right? So like the W-2 that employees receive for last year is going to include this amount, but not for the coming calendar year. So it's kind of a little complication there as well. All right. So the first $47,000 in wages and salaries paid is subject to OASDI. We know that. Employer 6, so they're just reiterating all of those rules, everything that we've learned in the preceding chapters here. Employers also subject to a net food tax 0.6% for 7,000. SUTA 2.3% on the first 7,000 as well. And this is for earnings in a calendar year, not the fiscal year, but it's going to go January to December, not July to June. State does not require contributions of employees for unemployment compensation or for disability insurance. So wage bracket methods are used to determine the amount of federal income taxes to be withheld. State income tax law requires a graduated percentage of the gross earnings. We're not going to calculate that here. This is just for purposes of figuring out what these journal entries would be. Union dues are withheld each payday from the union workers who are employed in the plant on or before the 4th of each month, the dues collected during the preceding month are then paid to the union. So this is April, all the dues are being collected during April. By May 4th, it's paid to the union. All right, so following narrative transactions for the January, oh, isn't that nice? That's hard to see. January 14th payroll. All right, let's see, Jason's the narrative. Okay, let me see if I can make this any bigger. Not much bigger, huh? Well, if you're able to follow along on your own, that would be good. But okay, so on January 4th, they paid the union $80. That would have been collected from the December paychecks. January 14th, they paid wages. Not the 15th, because the 15th falls on a Saturday. So they paid it on the 14th. They paid $38.90 to in salaries. Well, $38.90 in salaries is what was earned by the employees. In addition to Social Security taxes, the company withheld $455 from the employees' earnings for federal income taxes, $85.58 for state income taxes, and $45 for union dues. Okay, so we would have journal entry. This is what the journal entry then would look like. All right, so on January 4th, let's go to January 4th first off. We've got union dues payable. I'm going to put some T accounts up here. So we've got union dues payable. All right, so we would have started out with, this is a payable account, so it would be a credit. We would have started out with $80 in that account on January 1st, right? On January 4th, we're actually going to pay it. So cash is going out. This is the journal entry. Huh?
A debit? It's showing it as a debit.
That's a credit.
No, on the picture.
Oh, because that is, yes, because I haven't gotten to that part yet. This is our beginning balance here. So beginning balance as of the 1st. Okay, that's what's sitting in there. That means we know we have to pay that. So this first journal entry, we're going to pay it. We're going to debit the union dues payable account for $80. Does anybody know, is there a way to expand this? What is that?
You hit the book and then you try to look for it.
No, that's not what I want. Oof. Okay, tell you what we can do here. I'm going to snip
What I
it.
usually do is just go to dashboard and then I had it adjusted the book. Like I want to see the whole thing and then just like flip the pages.
So you go.
Cursive.
Whoops. I don't know if that's the right one. Urban, yeah. So you go through here. Does it give you a different view at all?
And then you go to, Better, you try to open the ebook.
Which one? Doesn't matter. That's the same.
Oh, it's not right.
Yeah. All right. No, it's just, it's hard to see. I know it's hard for the students who are online to see it. So, all right. Maybe it's easier for them to see than it is for me to see back there. These journal entries, of course, these are the account numbers. They had referenced the account numbers in the list of the different accounts there. So there's our beginning balance for union dues payable. We also had a beginning balance for cash, right? What was the beginning balance? 85,000? It was 85,000. All right, so again, that's our beginning balance there. First journal entry that we would record, the union dues payable, we're going to debit union dues payable and credit cash to make that payment. Okay, so on January 14th is our entry for the payment of salaries. Remember, our gross salaries is going to be our debit. So the 3890. And then all of the amounts that are withheld are going to be listed, are going to be our credits. And then cash is our final credit. So these are the amounts that then are being withheld. So we did have beginning balances, remember, in these accounts. So we're adding to those beginning balances. So yeah, we had $85,000 debit balance. FICA taxes payable, let's just make it. So we had 961, so liabilities is going to be a credit. FICA payable HI. 224.75. FUTA payable. FUTA payable. $91.50 and $350.75. FIT payable. SIT payable. So 1472 and 474.42. Union, already got the union dues payable. So we've got wages and salaries. Expense 46,500. And payroll taxes. No, 42. All right. There's our beginning balances. Hopefully you guys can all see that. Okay, so that first journal entry, union dues payable, is going to zero out, so $80. Going to zero out our payables there, and then the cash, $80. Here. Next journal entry we make when the employees, remember we're going to have two journal entries that are made at that point, wages and salaries expense, and then all of these liabilities. So wages and salaries, $38.90. I'm going to debit that, and then I have to scroll with all of these. OASDI and HI, so $241.18. And $56.41. And then the 455, I assume that's our federal income taxes payable, and then state income taxes payable. 455. And 8558. And then we've got union dues payable of $45. All right, so union dues must have gone up in price. And then we got cash out of 300683. Okay, so that's on the 14th. Also on the 14th, we're going to make these entries. So we're going to debit payroll taxes, and this is the amount that the employer owes. So 41040. Do I have, oh, 41040 to that expense. And OASDI 24118 and 5641. And then we've got probably Fuda and Suda here, right? Yep. So 2334 and 8947. Yeah. So as of the 14th, this is what is owed. Now, the next thing that happens on January 18th, probably the 17th, let's see. So the 15th was on a Saturday, 16th would be the Sunday, 17th would be Monday, probably Martin Luther King Jr. holiday. So the IRS would not be open on that day. So the taxes wouldn't actually be due until the 18th. They're a monthly depositor, I think they said, right? Okay, so the entry, they electronically transferred to the IRS FICA taxes and employees' federal income taxes withheld on the 2 December payrolls. So the amounts that were recorded already as our beginning balances in those liability counts. At the end of December, the total liability was $2657.75, and as I mentioned here, so Martin Luther King Jr.'s birthday is a bank holiday on the 17th. All right, so here's when they make that payment. So this is the third entry, right? So, but it happens, the first two happen at the same time. Second one, we're making a payment, so that's what triggers that entry. So we're gonna, we owe, let's see, the OASDI is 961. So this is the amount that was that we started with. The HI payable 224.75. Paying that. 14, where's the federal income taxes? We're going to pay this 1472. So that's our debit. Transfer that over, and then cash. Again, cash is going out. 2657.75. Okay. Everybody following me so far? Same information there. And then the calculations for all of those numbers. All right. Then, on the 18th, we also paid to the state the amount of state income taxes that were withheld for the quarter that was just ended. That would be the amount that was in the account at the start, the 474.42 right here. And we paid cash, so we're going to have to credit that again. I'm going to run out of space here. $474.42. Then on the 31st, we've got another payday. So $4,100 gross pay. That would be our debit, wages and salaries, $4,100. And then we had, let's see, here's the amount, so I don't have to calculate it. $254.20 for FICA payable. $59.45 for Medicare payable. $483 for federal income taxes. Counts here. State income taxes, $90.20. And $45 for union dues payable. And then we've got cash out of $3168.15. I'm running out of space. $3168.15. This was the 31st. Now we've got payroll taxes as well associated with that payroll. So payroll taxes of $432.55. There, and then $254.20. $59.45. $24.60. And $94.30. For those amounts. All right. We are going to deposit on the 31st FUTA taxes that were payable. Remember, that's going to be due on January 31st, the FUTA taxes. So we're going to deposit those on the 31st. The $91.50, the amount of our beginning balance. And then cash again of $91.50. I'm going to put it up here. We're also going to deposit our fourth quarter SUTA taxes. That's our beginning balance up here, $350.75 and $350.75. All right, when we get into the next period, and I'm not going to add all of these up for February. We'll just do it for January here. But we could see what our ending balance is for each of these months. So union dues, we've got an ending balance of $90, right? $90 credit balance. No, actually, let's not do it that way. All right, so here's our balances. Union dues, this is 131. Payable, 90. And these aren't necessarily in order, right? Cash, how much cash do we have? So this is going to be our union dues payable. move this over for everybody to see. All right. So this is kind of our trial balance here, although they're not, the accounts are not in order. Obviously, your assets are going to be listed first. Cash, we got to figure out what this balance is. So 85 minus 80 minus 83 minus 26575 minus 4742 minus 31618 minus 91 5 75 170 60. So that's how much cash we have in the bank here. FICA payable. I'm sorry, OASDI payable. So these, of course, cancel each other out. We have all of these amounts that we're going to have to pay. So 2 So 990.76. SUTA payable, again, those two cancel each other out. Or let's do the HI payable. So that 5641. 5945. 231.72. So we'll do FUTA payable, SUTA, IT payable. Run out of space again. Payroll taxes, make this smaller. FIT payable, SIT payable, and then wages and salaries and payroll taxes. All right, so FUTA, 2334 plus 2460, 4794. SUTA, 89, oh, is that a 7? Is that a 7 or a 1? We'll find out if I don't balance it. It's always fun when you can't read your own handwriting. 9430. 183.77. 455 plus 483. 938. State income tax, so 8558. 9020. 7578. More. These are actually going to be so. I'm not going to do. So these are our expense accounts. I'm trying to figure out. Wages and salaries. So we should, unless that didn't balance at the beginning. Let's see. If that didn't balance at the beginning, then that's what the problem is. $85, yeah. there's a bunch of other accounts in here, so this isn't going to balance. Because the wages and salaries, if this is our expense account, those are going to be debits. But obviously we're not going to balance if we do that. But those are our ending balances then at the end of January, with the exception of the payroll taxes and the wages and salaries. So all of these liabilities are amounts that as of January 31st we owe, right? We're going to pay this one on February 4th. That's when it's due. We're going to pay the OASDI, HI. We're probably not going to pay the FUTA yet because we're at the beginning of the year and we only owe $47.94, so we don't have to pay it yet, right? Well, the reason we paid it on January 31st is because that was for last year. We have to pay it at that point. SUTA as well, we will pay that at the end of the month, I think, probably, depending upon what the rules are. Federal income taxes are what's going to be paid in the middle of February. State income taxes are going to be paid at the end of February. Okay. Everybody follow okay. I know it's a lot, and I apologize. I thought it was going to balance. I didn't pay any attention to the fact that this doesn't balance.
Yeah, question. Because over there, in the balance is asset, liability, and equity.
Yes,
So,
I didn't put this in order. I didn't. Yeah, you would normally have your assets would be first, yes, and then your liability, yeah.
So the wage and salaries should be debited?
So those would be debit balances, yes, because they're expenses. So, and this is the amount of expense for the year. And this is where it gets a little tricky for the company that has a different fiscal year than the calendar year, because for W-2 purposes and payroll purposes, they need to know what their wages and salaries were for January through December. But for financial accounting purposes, they're calculating the salaries from July to June. So that's what this amount is that we're starting out with. This would have been for the first or the last 6 months of the previous year. Both of these. So when they do their financial statements, they've got to record it starting in July. But when they do the W-2s and all the payroll stuff, it's going to be starting in January. Okay. Questions? I know it's a mess. So this goes on. You want to do it on your own to go into to go into February and recording all of the amounts. Let's see. Oh, it goes into March too. This is for the whole first quarter.
So we're missing something, that's why it's not balanced out, right?
Yes, all those accounts these are only the payroll related accounts. So, and obviously the cash is going to be affected by other accounts as well. But you can see, like, there's no other expenses listed. So that's why it doesn't balance. Sorry. Let's see. So yeah, it goes to the end, then it goes to the end of the quarter. And it does show all of those transactions. I don't know if they used T accounts here or not, but they've got, yeah, these are essentially the T accounts. So cash, all the transactions that affected it for the quarter. FICA taxes payable, so OASDI, all of those transactions, the debits and credits. HI, FUTA, SUTA, federal income taxes, state income taxes, union dues, wages and salaries. So at the end, their wages and salaries expense is, at the end of the quarter, $71,360. So they would have added additional expense there. But again, this is, so they would have to look at last fiscal year as well and include what they had incurred in wages and salaries expense from January to June of the previous year to add it to that when they're doing like their W-2s and all of that. But they would presumably their payroll accounting, like they would have a payroll register and employee earnings records, and the period for those would be January to December. Okay. But it does make it more complex because you've got two different periods now that you're having to keep track of. Okay. And then the payroll. So all of this, we just did the first January of all of these. So we can look, so we see our ending balances January. I didn't do the wages and salaries one, but so state income taxes payable 85. Let's see. State income taxes. Oh, here, second one down, fourth one down. Sorry, 175.78. Okay, that's good. Union dues payable, we were at 90. Federal income taxes payable 938. SUTA taxes payable as of the 31st, 183.77. FICA taxes payable. OASDI. Oh, I'm sorry, that's Medicare. So as of 231.72, FUTA taxes payable January 31st, 47.94. FICA taxes payable January 31st, 990.76. In cash as of January 31st, 75.170.60. Okay. Questions? Is there any more on that? No? Other questions? Virtual students, any questions? Nope. Okay. Perfectly clear, huh? All right. So you can see why I said if you've got some financial accounting experience, this is going to be a lot easier to understand. That if you've not taken an accounting class before at all and have no idea what debits and credits are, or, you know, trial balance or income statements or balance sheets or any of that stuff, it's like walking into a class on Latin in the fourth year and you've never had Latin before. All right. So that's all I have for chapter 6. Any questions on homework?
Okay, in chapter 5, doing the form
940?
490, there's a questions about exceed over 7,000. I think it's in here.
Okay, payments over. So this is.
Yeah, how do you get that number?
Well, the 7,000 is the amount of, that's the tax, the wage base for FUTA taxes.
Not the 7,000, but I mean like the remaining balance of.
So anything that would be taxable over and above the 7,000 would be the excess. So give me a minute to erase all this. Okay. Now my arm is tired. Okay, so let's say we've got 5 employees. Employee 1, 2, 3, 4, and 5. We'll have their total wages here for the whole year. Okay, let's say 20,000, 3,000, 42,000, 17,000, and 6,900. All right, so each of these employees is limited to $7,000. What it's 7,000 or their wages, whichever is less. Okay, so we already know. So FUTA wages per person are going to be limited to that 7,000. So employee 1 has $7,000. Employee 2 has 3,000. Employee 3, 7,000. Employee 4, 7,000. Employee 5, 6,900. So our total FUTA wages so 21, 24, 24, so 30,900. These are our FUTA taxable wages. Total wages here. So what do we have? 20, 40, 82, 88, 9. The difference between those are the excess wages. The amount over and above the FUTA wages that were paid. So 88,900 minus 3,900, 58,000. So if you have a problem that gives you the total wages and the excess wages, you can figure out what the FUTA wages are through algebra, right? So if we've got total wages of 173,000 and excess wages of 122,000, and this is X. So 173 minus X equals 0. 122, well, in order to get that, we can just use algebra to figure that out, right? So we would do, so negative X equals 122 minus 173, and then we just make it positive. Minus 51. So X equals 51,000 for our FUTA taxable wages. Okay. Does that help? Okay, because yeah, the 940 is asking how much was paid in excess. So it's asking for this amount, and it's asking for this amount in order to come up with this amount. Mm-hmm. So I'll use different numbers. Let's just change this one a little bit. Forget about all of this stuff here. Let's say that our total wages were 188,900, and our excess wages are actually, yeah, our excess wages were 147,900, and we have to figure out what our FUTA taxable wages are. So that's X, the unknown. So what you do is you subtract the 188,900 from both sides. You're left with negative X equals 147,900 minus 188,900. negative 41. So X equals 41. So this would be our food and wages. Yeah. Other questions? Or did that answer your question, Kathy? Oh, I hear somebody out there. Yeah, Tammy.
I was working on chapter 6, question 54, where you have to do the employer's portion of the OSH and HI and FUTA. Isn't that equal to the same as the employees? Because when I put those numbers in, it's telling me it's wrong.
Okay, usually yes, but because of rounding, it might be slightly different. So let me open up that. Let's see here. So, chapter 6. Which number was it?
54.
All right, so compute the amount to be withheld from each employee's earnings. Employee taxes. Okay, so if and about, let me just read all of the instructions first. Record the portion of each employee's earnings that is taxable under FICA, FUTA, and SUTA. Have the total employer's payroll taxes. If an amount box does not require an entry, leave it blank. If required, round your answers to the nearest cent. Enter the tax rates as decimals, carried out to 4 decimal places when required. Okey-doke. All right, so so this is October 11th. So earnings today. Okay, so nothing for this guy, right? HI is going to be the tell me which one you're having issues with instead of going through all of these.
All right, so I got all the let me go back here. I got all the employees' information. It's when I get over to the employer's portion that any number I put over there is giving me a wrong answer. So like, for instance, the first one is 2596 in HI, which should be 2596 in the employer's portion, but it's saying it's wrong.
So if we take 1790 .029, the total would be 5191. Let's subtract the 2596. 2595. Try 2595. No. 2596 is, yeah.
Company is not, you cannot supposed to calculate SS on the OSTI or HI. No, it's supposed to, a month is supposed to tax. That's a month, maybe here, 1,058, 500. So how much is supposed to tax? How much taxable? That's why it's not going to make you calculate. Because I have the same problem since I made this exercise. It's not the same things like an employee. You take a.
Okay.
Yeah.
So, oh, wait.
You can put 2 for
earnings. Oh, this is taxes to be withheld, and this is earnings taxable. This is earnings. So how much is taxable? 1790? They're asking two different questions.
Yep, you're the bomb. I read that and missed it.
Oh, that's all right. No, I read it the same way you did it first. Yep. So they're, yeah. And then also for FUTA and SUTA, how much is the earnings that are taxable? Okay. Other questions? Anything else?
26.
26?
Sorry.
36? Okay, so Gallardo pays its employees weekly wages in cash. Supplementary payroll sheet that lists the employees' names and their earnings for a certain week is shown. Complete the payroll sheet, calculating the total amount of payroll and indicating the least possible numbers of denominations that can be used in paying each employee. However, no employees are to be given bills in denominations greater than 50. Okay, so how many 50s will we give Chad?
5.
20s? 0. 0. 0. 1.
Oh, yeah, so I think I can do the rest.
What's that?
Now I can do the rest.
Okay, 50. Oh, we're doing 50-cent coins? Okay. I don't know why.
So it's 1.
No, it doesn't want 50-cent coins. All right, so we'll give him 3 quarters.
No, it's
No, so it's supposed to
one,
put
one and one.
Hmm?
Yeah, it's supposed to put 1.
Oh, did I put so 1, but it said 1 was, or did I do that wrong? Did I not put 1? I thought I put 1 there. Oh, I guess I did. I meant 1. So yeah, so this one as well would be 5 50s. This one would be 6 7 50s. Yada, yada, yada. Other questions? Anybody? No? Another one?
I need to do more to know.
Oh, 2 more?
No,
Or you have 2 more to go?
No,
or-
I need to do.
Not there yet.
Oh, you're not there yet?
Yeah.
Gotcha. Gotcha. Well, I tell you what, on Tuesday, we're going to do review for the exams. Usually doesn't take the whole period to do that. So there'll probably be some time left for homework questions, which this homework is due next Tuesday. So hopefully by that time you're a little bit deeper into it and might have some questions. Okay. Online students anywhere? Anything? Bueller? No? All right. Well, I'll make up for all the times I've kept you late. I'll give you 12 extra minutes here. And you guys are excused.